Hello, everybody. It's Joshua Hayes here at BigWaveTrading.com coming to you with the stock market wrap up for, I guess it's going to be August 24th, right? Is that right? It's got to be right. Yeah, it's going to be the 24th. Anyway, what I want to look at is Friday's session, as it was very, very bullish to me. Now, I do know it was options expiration, so I know the volume is skewed. Still, let's pretend like we don't know anything about that we only have the charts to go by. What we see here is we see the S&P 500 breaking out above that consolidation area on extremely strong volume. We also can see that the money stream down here below is confirming the breakout. Also, on a weekly chart, there is one thing missing from the uptrend: strong volume. Look at the 50-day weekly average and look at volume, well below it. Started off above and it's getting weaker. So that is a worry. However, the breakout on Friday was on strong volume. We will see how we react Monday. However, I will say I do have a lot of very nice charts, and also we have a lot of stocks with some huge gains in very short amount of time. So I might as well just go ahead and just, blast off. These are just some of the returns we have right now. 53%, 25, 96, 138%, 60%, 21, 50%, 47, 31, 230%, 154%, 83%, 64%, 127%, 22%, 24%, 45%, 42%, 42%, 60%, 20%, 24%, 44%, 84%, 28%, 33%, 24%. That's just in the past 3 months, basically. And the biggest thing about that is, that we cut our losses short, so for non-subscribers. So obviously, subscribers, we should all be making money, because recently I've been making a lot more money than I have at any other point during the rally. Now, the funny thing about this is if we look at the NASDAQ here, we can see that the relative strength line continues to go down, which is very odd, because normally, as the NASDAQ and the high-tech stocks goes me. But I seem to be outperforming recently some of these indexes. But it's kind of worrisome to watch the NASDAQ relative strength line go down while price moves up. And as you can see, the NASDAQ broke out. Also, look at volume, much stronger than the 50-day volume average. Doesn't even look like options expiration really affected that much. And that should actually tell you how low volume might have been if we didn't have options expiration on that date. And then let's also look at the New York Stock Exchange, because New York Stock Exchange, of course, led. That's why its relative strength line ticked up from the day before. And as you can see, it also broke out on strong volume. Now, let's go look at what I like to pay attention to, the small cap stocks. There you go, the S&P 600 breaking out. Now, I have to use the IBD indexes because these are wonderful indexes. Everybody should subscribe to Daily Graphs Online. I want to look and see what the volume was on the S&P 600 on the daily. Volume was higher, and then also let's look at the S&P 400. Volume was higher than the day before, and as you can see, very strong. But now something else I want to show you, the very important thing. If some of you are lagging the market, don't worry. Look at the IBD 100. It's hitting new lows. Look at the weekly. Hitting new lows. Look at the support at 140. Look at the relative strength line now. Hitting new lows while it barely ticks higher. And then where it's more obvious, the IBD 8585. Look at how bad it's hitting new lows. And that should scare everybody, because normally you want leading stocks to lead market rallies. That's how we get the huge gains. Now, I know I have Dan up 230%, ISTA up 154%, FIRE up 127%. However, if this was probably like 2003, Dan would probably be up right around 690%. ISTA would probably be up around 450%, and FIRE would probably be around 375% gain. Seriously, because think about it. We had like the gain even late in the 2003 rally, EGHT, which was up 300%, 299% in less than a month. And that was at the end of the rally even. So I still have fresh breakouts, and even if it's option expiration, it looks like this market should continue to rally. And let's look at gold. Gold, look at how strong it bounced off of a day moving average. So it appears like we almost have an inflation-based rally. That's why we don't see leading stocks leading. That's why we instead just see the overall market moving up, while at the same time inflationary assets are moving up. And as you can see, our dollar, that's not very strong. Let me get rid of all those lines, but obviously that's not very good. And like I told you, it's been really bad since September 11th, whenever basically it was my sell your dollar and buy gold. But however, why do that whenever you had stocks like Taser in 2003 that, let's just say that you bought it right here and then you sold it up here. There, you made a 6,000% return in a little over a year. So you got long-term capital gains. 6,000, let's say you had 4-to-1 margin. Congratulations, you got a 24,000% return. I know that's crazy and insane, but guess what? It used to actually be kind of normal, because these used to be some of the kind of stocks, as you can see in 2003, that we used to have. See the gains in some of these that I'm bringing up? This is what we used to get back then. Oh, I mean this one right there. Sorry about that. Oh, no, I got the right one. But during this time right here, right there, sorry. SIGM. This move right here was the move for me. 128%, it was 90%. Big dealio. But then also, we had MT, which was IST at the time in 2004. Then we had back then Apple. And of course, back then you had your runs in Goog and then Baidu already. And so look at the runs now on the low volume. And that's what worries me, everybody. That's what bothers me. So as you can see, I kept this well under 10 minutes. This should give everybody plenty of time to go about and do whatever you need to do. I wanted to wrap it up soon. However, I do also want to say BZ is also up 97% since the very first long signal. And let's look at that. I give early longs to platinum subscribers. Here's where it was given, and here's where it's at now. There's your 97%. By the way, yes, take some profits off the table, like 33 to 50% to probably 66% on some people. And then, of course, the one that's up 230%, Dan. It was bought here. Here's the return now, 230%. Then here's another big winner, Fire. I have time to show it, mine as well. It was here, but it gapped higher, so we had to buy it here. So there's the gain, 116%. It was right around 120%. Then other ones recently, like LAD, from here to here. There's your gain. And let's see, let me pick out another one. Oh, let's look at a short-term one. It'd be silly to chase this one. OWW. Since we have time, let's do it. But as you can see, we have a lot of beautiful charts showing up. And when these beautiful charts show up, we got to take some action. And then let's show you another winner. Might as well. We got time. Right here to there. 60%. Short amount of time. When these chart patterns show up, we go out there and get them. And here's, might as well just do one more. There to there. So as you can see, it's been a very good market for us. So everybody should be making money out there at Big Wave Trading. However, if you are lagging since the March lows, as you can see by the IBD indexes, that would actually be normal. Okay, now I made it long. Aloha.